Now friends, come to this particular page and question ID number 41. Exxon company, a sole proprietary concern, was converted into a company on 31st of August of the previous year. Before the conversion, the sole proprietary concern had a block of plant and machinery, rate of depreciation 15%, whose opening WDV on 1st of April was 3 lakhs. On 1st of April itself, a new plant of the same block was purchased for Rs 1,20,000 after the conversion. The company has purchased the same type of plant on 1st of January of the previous year for 1,60,000. Compute the depreciation that would be allocated between the proprietary concern and the successor company. Go through the question, friends. Pretty good question, and that was simple only, but there is one conceptual clarity which I have to deliver. Let's do it. I'm giving you some time, friends. Just go through the question. Thereafter, I'll start. The question ID number is 41. Let me open it up. Question ID number 41. Now friends, see, in this particular situation, the entire block of asset has not been transferred. So for example, if there was a demerger in one of the previous question, if you see, I'll just show you that particular question because you should understand the difference in the treatment. And this is one I told you that conceptual clarity. No, 1 second. See this particular question. See this particular question. Okay. This was a question where there was some demerger and WDV of the entire block of plant and machinery on this particular date has been given. And out of the above, the WDV of that particular block of plant and machinery of that entire division. So it is the WDV of that entire division was already been transferred. So this particular situation is a different situation. This is also covered by explanation to section 43(6)(c). Okay. However, in the given question, friends, there is a succession of the business, no doubt about that. But in that particular succession of the business, that WDV of the block has not been transferred. So, any such situation, friends, will have to be handled as per the provision to section 32, and you have to allocate the depreciation between the successor company and the transferee company. That means the person who is receiving that particular asset, that has to be allocated between the number of days or used that particular asset. I'll show you that particular provision in just some time to go, but before that, let me do that particular working first of all. Okay, so there is X transferred the assets to the company. Just understand the working. Thereafter, I'll do that particular technical thing. Okay, you have opening WDV, additions made during the year, any assets which are sold during the year, if any such data has been given, depreciation. Okay, you have to calculate the normal depreciation, and we will say the closing WDV. Now, this is a situation of a succession of the business where the WDV of the block has not been transferred. Okay. So, in this particular case, we have to divide the depreciation between these two entities because of the succession of the business. Let me check up the data in the question now. X was a sole proprietary concern. So, sole proprietor and proprietor is always one in the same, friends. So you can say that Mr. X also, if you say, I mean, just for explanation purpose, there will be nothing wrong. But let's say X and company sole proprietor concern, it was converted into a company on 31st of August. Okay, so proprietary concern converted into a company. So company is a newer entity. You can say that company is the receiving of these particular assets. That means a business has been transferred to this particular company, which we call it as a successor company. Now, before the conversion, the sole proprietary concern had a block of plant, and machinery. Rate of depreciation is this, whose opening WDV was 3 lakhs. Okay. On 1/4 previous year itself, a new plant of the same block was purchased for 1,20,000 after the conversion. So your opening WDV was 3 lakhs. You have purchased the same plant of the same block, that is 1,20,000. Okay, and the company has also purchased the same type of a plant on 1/1 of the previous year, 1,60,000. The company has also done additions to that particular block, and what should I say? The proprietary concern has also done some additions to that particular block. So, opening for the proprietary concern, let me write X and company only. 3 lakhs, nothing for the company. I am adding proprietary concern 1,20,000 and company is adding 1,60,000. Okay, there is nothing has been sold during the year. Depreciation is at the rate of 15% already provided in the question. This is 4,20,000. Okay. Now the X and company has added the depreciation. Added the asset on which particular date, that half rate, full rate, etc. If at all matters, So let me just check up that particular point for that half rate, full rate, and all that. So on 1st of April. So when it comes to the X and company, it will be going to be a full rate of depreciation because it is on 1st of April. And when it comes to the company had purchased the new type on 1st of January. Okay, so for the company it is going to be half rate depreciation, and for the proprietary concern it is going to be full rate. And this particular succession has already taken place. Okay, so X and company it is full rate at the rate of 15%, so it will be 63,000 depreciation, and the closing WDV is going to be 357. Okay, and for the company it's going to be half the rate, so it's going to be one second. This is 1,60,000. So 15% and half the rate. So that is going to be 12,000. And this is your 1,48,000. Is that okay? Now, 63,000 rupees. The 63,000 rupees, which is the depreciation of the transferor entity in the succession of the business, has to be divided between transferor and transferee based on the number of days. This is what the provision to section 32 says. It has to be divided between the ratio of number of days, and the amount that you are dividing between X and company's computation and the company's computation, the total figure cannot exceed the actual depreciation. That's a very natural thing. So if you have to divide 63,000, you cannot divide more than 63,000 and give the excess depreciation. That is a very logical thing, friends. So ultimately you have to divide in the ratio of number of days, amount of 63,000, because for some portion this particular block was by the X and company, and for the some portion of the number of days during the previous year it was by the company. I'll show you that particular provision, don't worry. But let's do that number of days working. Number of days by X and company, number of days by the company, and the total number of days, of course, during the year is going to be 365. So you have to break up 365 number of days. See the cutoff date which is already given to us in the question. Cutoff date is, it was converted to company on 31st of August. So it will be 1st April to 31st August. Just calculate the number of days in your calendar. So many times, friends, I already taught you. So this is 153 number of days. And this will be the balance number of days. So 212 number of days. This is your total number of days. So ultimately, friends, 63,000 rupees, the depreciation you have to divide between the proprietary concern and the company. Is that clear? And 63,000 multiplied by 153 divided by 365 in one situation. And in the second situation, 63,000 multiplied by 212 divided by 365. So 153 will come as 26,408. So that will be the share with respect to X and company. And with respect to the company, it is going to be 36,592. Use your calculator quickly, check out the calculation mistake. after doing this particular bifurcation, the total depreciation to the proprietary concern is going to be 26,408, because 36,000 is going in the assessment of the company. So the company will have 36,592 plus the 12,000. So that is going to be 48,592, the total depreciation. So you cannot do that excess allocation, and that's also a specific provision, and the number of days is the ratio that you will have to use it. And now this particular business has already been transferred to the company. So now in the next year, whatever was the WDV of the entire block, whatever the WDV of the Exxon company was, that will be used up by the company for the purpose of depreciation calculation. Okay. So this is your ultimate calculation. Okay. Now let me take up that particular provisions first of all. Okay. See, that is contained in Proviso to section 32. Wait for a second, friends. I'll have to scroll it. Okay, here we are. We are very close to it now. See, this is a section 32, your depreciation provisions. To that, there is a proviso. This is the proviso which we are trying to focus. You have to divide the depreciation between transferor, transferee based in the number of days ratio, in the ratio of number of days. That is one of the direct thing that should be come to your mind. Secondly, the aggregate depreciation, that is the total depreciation which you are going to allocate, cannot exceed the depreciation which is otherwise permissible. It is also a very, very natural thing. Okay. So that is also provided. The aggregate depreciation with respect to all these assets shall not exceed. It shall not exceed. In other words, you cannot do that excess allocation. It's a very, very natural thing. So as per the question, it was 63,000. So entire 63,000 has been divided. So you cannot do that excessive thing. That is one of the point. And the second point is you have to divide it in the ratio of number of days which has been used by the respective person. This is how these particular provisions are to be applied. However, I once again repeat, friends, for your better understanding, because there the students will always do a lot of confusion. Now when you have understood the answer of this particular question, this is the answer of this particular question. In this particular case, the answer is based on the understanding and the concept that the entire block or the part of the block, that means the entire division or something like that, okay, etc. is not transferred. This is how it is to be understood. However, logically, of course, it is transferred. There is no doubt, because the business is converted into the company. That means logically, the entire assets have been acquired by that particular company. But we don't have that, what should I say, specific provisions under section 43(6)(c) with respect to the transfer of the block. That is something what has been understood. However, the succession, the business has already been transferred. So no doubt about it that. So here the confusion can come that why should I not do that particular WDV transfer like we have done it in the previous example of a demerger. Because demerger adjustment is a different one and this particular adjustment is a different one. And this is what I'm just trying to say, that this is where the confusion can always come into picture. So that particular point of the law which I want to bring it to your notice, and that is, look at this 43(6)(c) explanation. One second, let me scroll. See, this is your definition of the WDV under section 43(6)(c). Under this particular 43(6)(c), this is a block of asset. Okay, and this particular block of asset, here we have the variety of explanation. You see this particular explanation where in the previous year the block of asset is transferred. So that is the language and that is the difference which is not there as much as the question is concerned. Okay, that is the reason we have used the ratio of number of days. Okay, now here it is, see, subsidiary, amalgamation, all these situations are there. Okay, further, if you look at this, any assets forming part of the block of asset has been transferred in the scheme of the demerger. Our particular question was not in relation to the demerger. That is the reason we could not use these particular provisions. Okay, where the asset forming part of the block of assets has been transferred. Again, here also this is demerger. That is the reason we could not use these particular provisions. Okay. Further explanation to see also where block of asset, any block of asset is transferred by a private company to unlisted company or to a limited company, etc., etc., etc. situation. So basically we have not used this particular provision. Why? Because there is no specific mention in this particular regards, and that is the reason we have used ratio of number of days, that is proviso to section 32. Let's go to the next question. Okay, now so this was the confusion I've already solved, and let's go to the next question. Okay, come to this particular question ID number 43. You and I Limited purchased the machinery from Germany for USD 1 lakh on 3rd November of the preceding year by borrowing from East West Bank Limited. The rate of exchange on the date of acquisition is 43. The SSE U and I took a forward exchange rate on 5/10 of the previous year when the specified rate of the contract was 45 USD. Compute depreciation for the previous year and the year before that. So friends, this particular is a simple exchange rate fluctuation. So in the year in which you have entered into this particular forward contract, you will have to adjust your block with respect to the exchange fluctuation. Very, very simple one. So first of all, we will have to take this particular USD of the preceding year with this particular rate, and we will adjust the WDV by the amount of the exchange fluctuation. So the next one, question ID number is 43. I will just say year number 1, opening, addition, anything what has been sold, so nothing is opening. 1 lakh, the exchange rate 43, so 43 lakhs, nothing has been sold, so it is 43. Get the depreciation at the rate of 15%. Just check half rate, full rate based on the 180 number of days test. So multiplied by half rate. Then let me check once again in the question whether it is half rate. It was somewhere in 3rd November. So 3rd November will come in half rate. And so 15% just multiply into half rate, that is 3.23 and 39.77. Okay, these are year number 1. In the year number 2, opening, additions, sale. So this is 39.77 is going to be opening. However, in this particular year, there will be 1 lakh multiplied by exchange fluctuation adjustment. Nothing has been sold. So 41.77. Depreciation at the rate of 15%, but now it will be, now there is no need to see that full half. This is only exchange fluctuation adjustment. So now don't confuse yourself with full half. It will be full only because the asset has been used for the entire period of previous year. Don't confuse here half rate, full rate. No need to apply even if the question confuses. So first of all, let me check whether is there any confusion here in the question. The assessee took forward exchange contract on 5th of October. Okay, so this 5th of October onwards, calculating number of days, 180 number of days, no need to do that. No need to do that because in the second year, it is only the exchange fluctuation. Okay, no need to do that because that date was already printed. That's the reason I told you. So 15%, straight away take it as 6.27. Okay, 35.50. Just check the rounding of differences if any. Okay, this is your adjustment to be done. This is also provided under 43A provisions of the Income Tax Act. However, not going into the technical details of those particular provisions. Reason being, it is very simple, no big deal whatsoever. Okay, so answer is over. Update your answer fully. Let's go to the next question. Question ID number 44. In case of Viresh, there are 2 lorries at the beginning of the year used in the transport business. The return on value as on 1/4 of the lorry A is 7 lakhs and lorry B is 5 lakhs. During the lorry C is purchased on 10/12 for 10 lakhs. The rate of depreciation applicable is 30%. On 28/3, the lorry A is sold for rupees 8 lakhs. Determine the amount of depreciation available to the assessee for the year. What will be your answer if instead of selling lorry A, lorry C has been sold for rupees 8 lakhs? Now friends, this is a good question and a good concept as such come into picture. Let me explain this particular concept very well and thereafter I'll solve this particular question. See, we have concept of opening, additions and the sale. The additions can be of 2 types, basically half rate or the full rate. Okay, that means when you are calculating the depreciation, whether you should give effect to the half rate depreciation first or the full rate depreciation. Technically, the law does not say that whether you take the half rate and full rate or first, something like that. But the good interpretation of section 32 is that when you are claiming a depreciation or when you are calculating the depreciation, first give the effect to those assets, because that's a specific provision. First give the effect to the cost of those assets which are eligible for half rate depreciation, and the balance, if any, I repeat, and the balance, if any, you multiply with the full rate. Okay, so the message here is, technically law does not define all that, but the best way to calculate the depreciation, first out of the WDV apply half rate relevant assets, and thereafter balance you apply the full rate relevant asset. Now in this particular question there is another complication, because that one asset which you have already purchased and the asset that you have sold, supposing if it is a same to same asset. So if the lorry A that you have already selling, lorry C itself was already sold. So that could bring us to some discussion and some more extra complications. That I will do it, friends, after. Just give me some time. Let me open up my answer and thereafter. Okay. So question ID number is 44. Okay. You have opening, addition, sale, WDV, depreciation, then you'll have a closing WDV. Okay. Now in this particular question, they have identified that particular asset for you and all that. In fact, when the asset goes into the block of asset, conceptually, friends, it loses its identity from the calculation point of view. In fact, the physical identity of the asset will always be available, no doubt about that. But conceptually, while calculating the depreciation, normally we don't look at the identity, but sometimes we have to do that. Okay, so that's basically the logical. There were 2 lorries. Okay, there were 2 lorries at the beginning of the year in the transport. So you have some old assets into that particular block. Now lorry A has been added. Okay, so lorry A is you had in the beginning was 7 lakhs and you have lorry B is 5 lakhs. So total is 12. Okay, so you can say that WDV is 7 plus 5, 12. Now normally, friends, in the block of asset system, we should never have, and it will never be a case with something like WDV of the individual assets. We never have that particular concept. But at a few of the places where such kind of data has been given to us, so we will have to take it as a block. That means, we have to do that extra adjustment because we are student, and we'll have to say that the WDV of the block is going to be the total figure. Conceptually, friends, under the tax laws, where the assets are forming part of the block of assets, the individual WDV of the individual assets basically merges with that particular block. It's a fundamental concept and the principle with respect to the block of assets, and thus no need to have that individual thinking also. But if the question is printed like that, we have to translate the question data into our answer, and this is how we have to use it. Okay, so we have opening A and B total during the year lorry C was purchased, and on 10/12, so because it was on 10/12, it will be coming into half rate category. For the purpose of calculation of that particular depreciation. Rate of depreciation applicable is 30%. Good, that is printed because we don't want to mug up the rates of depreciation. On 28/3, the lorry A is sold for X amount. Okay, so let us do that. Now, opening, only for the sake of understanding, I am saying A and B. Okay, so total is 12x. Opening WDV of the block. This is a block of lorries. Okay, and during the year you are adding another lorry called as lorry named C. That was 10 lakhs. Okay, and lorry A has been sold. So there is a sale of some asset forming part of the block of asset. And this is eligible for half rates. I'll just make a comment here because it was purchased somewhere in the December. So there is a sale of lorry A, and the amount which is given to me is 8 lakhs in the question. Okay. So my WDV is 14 lakhs. Now this is the concept which I wanted to convey. So the total depreciation is on the WDV. The depreciation is on the WDV. That means conceptually you will get depreciation on 14 lakhs from the tax law point of view, because it is a depreciation on the WDV. WDV is after adjusting the sale price. That is also defined under section 43(6)(c). That what is the WDV? Opening plus the additions minus the sale price, and the sale price here is the total sale price. In fact, it is net sale price. In other words, we do not have individual profit. I repeat, we do not have the concept of profit on every individual asset transaction which are forming part of the block of assets, unless and until the block becomes negative or the block becomes empty. These are the two exceptional situations. But normally, friends, we do not have, I repeat, we do not have individual WDV concept of that individual asset and individual asset profit concept where the assets are forming part of the block of asset. This concept is not there. So we have to look at the group of the assets only. We have to look at the block of the assets only. So first of all, at this stage, friends, I want to bring your attention to the definition of the WDV of the block of asset. And that is, in fact, a long definition, but a simple one. Section 43(6)(c), which defines the written down value in relation to the block of asset. Okay, come to this particular clause number C. See, this is what is defined, and this is basically the definition of the block of asset. Okay. This block of asset definition, in fact, whatever we had been using at all the places like opening plus addition minus the sale, this standard format that we are using it, look at this, that WDV of all the assets falling into that particular at the beginning of the previous year, that is basically your opening WDV, shall be increased by the actual cost, that is the additions that we are already doing it, shall be reduced by a reduction with respect to the monies payable, with respect to assets sold, discarded, demolished, destroyed, together with the amount of the scrap value, if any. In other words, the entire sale price, I repeat, the entire sale price get adjusted in the block. In other words, friends, your block of the asset conceptually under the tax law is basically your net cost of all the years taken together, right from the inception or the formation of that particular block of asset. So you keep on adding, you keep on subtracting. The add less, add less. You have to keep on doing that. Exceptional situation will be only when the block becomes negative or the block becomes empty. Okay, so this is the definition. Okay, now come to this particular point. So your depreciation is on the WDV, so you have to exclude first of all half rate. Okay, 1 second, I just need a little bit of space here. So okay, so how much is eligible for half rate? So 10 lakhs, that is your addition, which was this one, the lorry C. So multiplied by 30%, multiplied by half rate. And the balance figure, this is what I'm just trying to tell you. This is the balance figure So you get depreciation on the WDV only. So balance is 4 now, multiplied by 30%, that is the full rate. This is how the depreciation calculation should always be effected. Okay, so this is going to be 1,50,000 and this is going to be 1,20,000 and your closing WDV is going to be 14 minus these two, that is your 11 lakhs and 30,000. This is your calculation of the first part. So first, consider half rate eligible assets, balance if any. I repeat, balance if any. For example, if you increase this particular sale price, if you increase this particular amount, then naturally you might not have the balance. Might not even have the balance. That's the reason I'm explaining to you, called as balance. Okay. So keep this in mind. First, consider the asset. Now, the second situation in the question. In the question, determine the amount of the depreciation we have already determined. What will be your answer if instead of selling lorry A, the lorry C itself has been sold? That means the same asset you purchased during the year, maybe you were not satisfied with, or maybe there was some change in model or something, whatever. So you had to give up that particular asset, and the same asset only you are selling it. But what you had done, you had purchased this particular lorry C. How much did you purchase for? 1 second, let me check. Lorry C is purchased for 10 lakhs, and supposing if the same lorry has been sold, for 8 lakhs. So basically at the end of the year, you will imagine that there is no lorry number C into this particular block, but the cost is already included in that particular block. That means some portion of the cost is already there into that particular block. That could create a confusion. So how do we handle this? Where the same asset has already been sold, and it's a good question because the same asset that we are imagining or we are thinking is basically the same asset which are again coming in half rate category. That is a beautiful part of it. Okay, so 12 lakhs. Let me update the second situation. Lorry C you are adding. Now instead of selling lorry A, you are selling lorry C only. Okay, in the second alternative. This is going to be 14 lakhs. So WDV is not going to change or not going to get affected. But now our depreciation issues will come into picture. That lorry C which is going, the cost of lorry C which is included in this particular block effectively is 2 lakh rupees, but actually this particular lorry is not there at the end of that particular year. So different people do take different opinion on this particular kind of a subject, but the best thing which is very well accepted even by the institute for their suggested answers and all that, this is what I'm just trying to tell you. Okay, so here whatever is the cost which is in relation to lorry C, that much will be eligible for half the rate because lorry C has been used during the previous year for less than 180 number of days. That's the concept. So lorry C, whatever cost that we see here, will be eligible for half rate. Balance, if any, will go for the full rate. So the lorry C was 2. Okay, so here it's going to be 2, basically 10 minus 8, because same to same lorry is going now. So 2 multiplied by 30% multiplied by half the rate. This is going to be the adjustment with respect to lorry C half rate. And the balance is going to be 12 lakhs now. So 12 lakhs multiplied by 30%, that is going to be full rate if the lorry C itself was sold or transferred during that particular year. So let's calculate 2 into 30% into half, that is 30,000. And 12 lakhs into 30% is going to be 3,60,000. So total depreciation now it's going to be 3,90,000 and your closing WDV is going to be 10 lakhs and 10,000. This is how your answer is to be developed. where the same to same asset formed out of the block of asset has been transferred. And it was a beautiful question because the lorry itself was again in the half rate category. Okay, let me go back, check up with the question whether anything else that I have already missed out. Friends, come on, let me revisit. What will be your answer if instead of selling lorry A, lorry C itself has been sold for 8 lakhs? So I think we have already considered that, and this is your final answer. If you want to just check, yeah, okay, so you have done this particular calculation fully. That's all.